Let's get back to breaking news on Tesla now. The stock is down 1.4%. It's actually picking up a little bit from a few moments ago. Pulling out all the stops to hit production numbers, we've seen internal emails in which Tesla executives urged people to really prove it to the haters, the quote-unquote haters, that they could ramp up production on the Model 3, also offering a limited number of workers to get off production of the Model S and Model X tomorrow, Friday, in order to work on Model 3s and ramp up that production. We have the reporter who broke all of this news now, Craig Trudell, joining us. Craig, tell us more. Very emotional emails.
Yeah, Dana Hull actually is a reporter on this story, and she got a hold of these internal emails from Tesla manufacturing and engineering executives. It's really important for the company, obviously, needless to say, to hit Model 3 production numbers. They've spent billions of dollars getting this car up and running. They've had real trouble getting it going. And that's been super problematic for the company at this point. Because they haven't been able to get any return on that investment.
But what does pulling a limited number of workers off of 2 production lines to put them on the Model 3 line for just a couple of days do when you're only producing maybe 200 cars a day, and really Wall Street was thinking you'd be up to 2,500 cars a day by now?
Right, it's a good question. I do think that it's probably a situation where it's only going to be incremental, and one of the things that you see in these emails is this idea that they were at about 200 per day at the time that one of the emails were sent, and there was this urgency to get to 300 per day, which is closer to the weekly production rate that they've said that they'd be able to reach by the end of this quarter. So there was sort of an acknowledgement with this within this email that they are not at a pace where they need to be in order to hit their target. They still have some ways to go, but
Romit, you are taking down your price target from 500 to 420. Why?
Yeah, we did lower our estimates today based on weaker data around Model 3 production, but we're still quite bullish. I mean, it's interesting to me that the market seems to be ready to throw in the towel on this company right at the point where they're about to see their Model 3 vehicles ramp into production. They have a tremendous amount of momentum going into this major shift towards electric vehicles.
Are you confident they can get to 2,500 a week, which is what they've promised? Gene Munster of Loop saying this morning on Bloomberg, no, that's not going to happen.
No, I don't. So they have a Q1 delivery update coming next Thursday. I don't think they're going to hit the 2,500 per week announcement or guidance, but I think expectations are probably too low. I think the street's looking for them to come in at closer to 1,000 per week. I think they'll do better than that.
Yeah, Romit, I mean, given the negative news that surrounded autonomous driving in the last week, whether it comes to Tesla or Uber, have you started to sort of question the whole autonomous driving experiment? I know Sanford C. Bernstein and Cohen and Group have been quite outspoken. Cohen says it's questioning autopilot leadership. Are you having doubts or not?
No, I'm not. Look, the promise of autopilot is really that you can save a tremendous number of lives. Each year in the U.S., you have about 40,000 fatalities. And what Tesla has said is that by using autopilot, you can reduce the risk of an accident by 2 to 3 times. That's not going to eliminate the risk. And that's something that investors and regulators need to come to terms with. Using self-driving technology doesn't reduce the risk of an accident to 0, but if it reduces the number of fatalities from 40,000 to 10,000 or 20,000, that's a very positive outcome.
Tesla is sort of a mystery to everybody. It has its haters, it has its lovers, it's a passion story. Look, there you can see the bonds just absolutely plunging. Ultimately, this is a story that has been sustained with debt that's gone toward burning piles of cash. Is this the tipping point where all of a sudden financing becomes overly expensive for Tesla?
Maybe.
Okay.
It's certainly more...
Take a stand.
Yeah, exactly.
Okay. It's certainly more of a tipping point than I've seen thus far. I mean, we've seen plunges in Tesla's stock before. We haven't seen it with the bonds so much, but then they've only been around since August anyway. But certainly, this feels like more of a moment.
Well, see, here's what I'm struggling with. I was speaking with Joel Levington of Bloomberg Intelligence earlier. If you take a look at the chart showing the yield, the inverse of the price is the yield. Prices go down, yields go up. Here you've got the yield going near 7.5%. He was saying that Tesla's going to run out of cash by the first quarter of next year, and that yields this high is an unsustainable prospect. Go.
It's certainly unsustainable if they're planning on filling their financing gap with bonds. That looks closed off to them now. So I think their only option this year, if they're going to deliver on the Model 3, if they're going to deliver on, you know, whatever the next project is, they're going to have to do an equity raise. I mean, Moody's said it in so many words last night when they downgraded the bond.
And there are so many projects, right? You've got the Roadster, you've got the truck. What else do they have planned? Every single time
Rockets,
you think there's
tunnels.
an issue, yes, Elon Musk announces something new.
How much does, when a company has a business model like Tesla's, is it essentially become a bank? In the sense that so much of it depends on confidence, and when that confidence gets shot, that ends up sort of coming back and hitting the fundamentals of the fundamental ability of the company to operate.
Yeah, I kind of think of Tesla as a money mechanism. So it's there to raise external financing. It cannot finance itself. It very rarely generates any cash at the operating level. It's completely dependent on external funding. It's proven very adept at raising that thus far, but right now with both the bonds and the stock in free fall, that's got to be called into question.
And we have this chart here, pretty extraordinary. Tesla's interest expense as a proportion of gross profit, in quotes, rising pretty substantially. So when you talk about the ability to finance itself, and you say it's not really doing it through its own operations, this is not the direction you want to see in this chart.
No, absolutely not. I mean, it took a third of their gross profit margin in the fourth quarter. What this company essentially needs to do is deliver on the Model 3. It's essentially built itself to the point that it has to grow into a mass market car company. The problem is it's really struggling to get there. And so that's forcing it to tap external funding at an alarming rate. And if it doesn't show any progress on getting those Model 3 production numbers up by next week, for example, we could see another sell-off.
Yeah, that first quarter of vehicle deliveries announcement is going to be critical. I mean, Elon Musk has delivered in the past with these announcements, hasn't he? He's somehow made the bleeding stop.
I think what he's done in general is a lot of the targets that he sets don't actually get met, but they tend to show some progress that enables him to keep going. So if you look at the end of the fourth quarter, they didn't really meet the target, but they put out a statement saying we're gaining momentum in production, and that bought them another couple of months of grace.
Walk me through the drop. I mean, you see investors like loving Tesla bonds, even if they didn't want it, do they come in and buy?
Exactly. Yeah, that's kind of been from the start wondering why would you buy a company that makes no money, especially in bond worlds when really you only care about getting paid back. It's not like you're the equity investor and you care about a stock that's flying so high. So that's been a concern really since August. And when the downgrade came last week, I think that really just put all those fears right, in the center spotlight again, especially as we come up this week on the production figures, which everyone has their eyes on.
Well, and Molly, this is a real consequence if you own a Tesla bond, no question. It's also a real consequence to Tesla because they need to raise more money. They're burning through money as fast as you can imagine. They got to go back into the market.
Well, that exactly makes you wonder, how are they going to do it next? You know, Elon has been so creative, has gone through about every avenue of raising money so far that you could possibly imagine. And that's what investors are looking to next. I think from people who I've spoken to, they seem to think a secured bond sale would be next, maybe, leaning some of the bonds against the Gigafactory, which is really where all of the value would be for a bondholder, and would certainly give you some more comfort going into.
Like an asset-backed kind of bond to the Gigafactory?
Well, they already do have some ABS outstanding, but this would just be a secured bond sale, exactly. So right now in an unsecured, you're not really getting, you have a claim on nothing. The only thing that's below you right now is the equity, which isn't doing that great either.
They also have been able to stay a little bit ahead of the sheriff by selling the options to buy the Model 3. If in fact the numbers come out bad, now maybe they'll come out great, but in fact they are disappointing once again, it's going to be harder and harder to get the next group of people, whether it's on the trucks or it's on the cars, to put up their money against the possibility of getting a car or a truck.
And that's exactly been the struggle so far. You know, how are you going to sell the story? The dream is out there. Elon's out there. He's been selling the charm exactly to the investors, you know, the story that we know. But there still has to be a proof of concept. Are you going to hit that target of however many Model 3s a week that it's going to be? And right now, that's the main question. You know, is this going to be a mass vehicle, or can you really hit those numbers?